Welcome to the Defence Property Podcast, the podcast where we talk about all things property investing and real estate for Australian Defence Force personnel. Whether you're looking to build and scale a property portfolio or relocating across Australia, we've got the insights and tips for less stress and more success. Let's dive in.
Sweet, and welcome back to another episode of the Defence Property Podcast. This week, we're talking about the Australian property market. So we're looking at the CoreLogic, which is Australia's leading data and market aggregator. So what the April of 2026 numbers actually mean. So Australian property is worth 12.6 trillion, and that's nearly 3 times the amount of the entire superannuation system, and it's about 3.5 times the stock market. So Australian real estate really underpins Australia's wealth. So more than half of every Australian's household wealth is sitting in bricks and mortar. So when the market moves, it matters. Like when the market's moving, whether that's interest rates on home loans, prices in property, it matters because people are paying attention because over half their wealth is sitting in real estate. So this month, the numbers are telling a very interesting story. So the big picture, nationally Australian real estate, over the last 12 months rolling, the annualised growth has been 9.9%, which is quite one of the fastest annualised pace since June of 22. With very little help from government fiscal policy amendments to the first home guaranteed scheme back in October of 25. This probably really boosted about 5% of that 9 almost overnight in that quarter. But quarterly growth is actually slowing. So the most recent quarter is 2.1% growth in Q1 of 2026, which is actually down from 2.8% of Q4 of 2025. So although we've had the biggest growth in a 12-month period, the last quarter has been down. So it's starting to slow. The engine's still running and the growth is still there, but we're not accelerating. We're decelerating. So we're not in a boom anymore. We're more in a resilient, slowing market. So 12.6 trillion in residential real estate in Australia, 11.5 million dwellings in Australia, and 572 billion in sales in the last 12 months. So this does sound like a lot, but it is the biggest asset class by a country mile in the country. But with the national boom slowing, this is where strategy really matters, market selection really matters, due diligence is critical, and negotiating and buying well matters more than ever because the market's not going to do so much of the heavy lifting for you. So we're in a bit of a 2-speed market as well. So where it's hot and where it's not, and where's the opportunity. The big story of 2026, the red hot markets over the last 12 months, Perth did 24% annualized with 7% in the last quarter. And the days on market sitting about 9. So they're selling in essentially the first week once they hit the market. Brisbane did 19% in the rolling 12 months. So the key here is it's at record highs and it's done, 19% in the last rolling 12 months, but year on year prior, it was also double-digit growth. The big issue with Brisbane is affordability. Darwin, very similar to Brisbane, did 19%, which is up and again, record highs. I've expressed my views on the Darwin market previously where it's too isolated and too small, which both transition into a highly volatile market. So it's not somewhere I would look to buy. Adelaide did 11%, so quite healthy, just shy of that 1% per month. It's at record highs as well. A cooling market was Sydney over the rolling 12 months, according to the CoreLogic data. It did negative 0.2, so essentially sat flat for the 12 months. And it's sitting just 0.4% from the record highs of the Sydney market. So it's at the top, it's just flattened out and sitting up there. And the opportunity market is Melbourne. So somewhat flat depending as a broad capital over the 12 months. The last quarter, again, fairly flat. But the key here on this market is it's 1.3% below its record high, which was back in 2022. So since 2022, when it hit its peak, it's contracted only 1%, which is very minimal, but it's done nothing since that. And that's where the opportunity potentially lies. So it's not had its full recovery yet. And of all the capital cities, it's presenting to be a lot more affordable. So affordability, people and businesses, they will generally move and relocate to buy where they can afford, and population growth, where the population is growing. So Melbourne and Sydney have the highest amount of international migration, and Melbourne's population is actually forecasted to overtake Sydney in the next, I think it's 10 years. However, if we look at interstate migration, Queensland and WA are still outperforming other states. So one to watch there. So when we're talking entry level and impact, the stat that surprises a lot of people is the bottom quartile, or the cheapest 25% of homes, are outperforming the most expensive 25% everywhere, Australia-wide, and also the middle 50%. So Sydney's cheapest quartile was up 1.8% over the quarter, whereas this most expensive quartile was down 1.8%. So the cheapest is up and the most expensive is down. Melbourne, much the same. The cheapest quartile was up 0.7 and the most expensive was down 1.6. If we take that over the Nullarbor, cheapest homes in Perth were up 9.2% in one quarter. So what that's telling us is demand is concentrating at the affordable end of the market, and buyers are relocating and chasing the suburbs and the regions that they can afford to buy in. Just because property prices Australia-wide have gone through huge growth over the last 5 years, it doesn't mean that people will stop buying. It just means they'll chase affordable markets. Whether that's a unit, whether that's a regional area, they'll just sniff out whatever they can afford. And for investors, the entry-level suburbs are where the current heat is. So we want to be potentially chasing those bottom 25%, depending on our budget and our portfolio and our overall strategy. It's something that we need to keep in forefront of mind. So if someone's sitting on the fence waiting to get into the market, this is the segment where urgency is the highest right now, and it's that market heat we can see for the bottom quartile in the regions. Supply levels, stock and market and inventory are quite low, and we want to make sure there's low building approval ratios, and also days of market and vacancy rate for that area as our key demand metrics. So the supply story, that leads nicely into the supply story. Why are prices staying up despite, interest rates increasing and affordability decreasing? Prices are still staying somewhat elevated, and with most of those capital markets we mentioned sitting at all-time highs. And even Melbourne is the only one that's not near its all-time high, only 1.3% below. The key with that is it's below its 2023 peak. And the regional story is that total listings nationally, so total properties in all of Australia, is currently sitting at 122,493. Now that sounds like a lot, 122,500 properties for sale. It sounds like there's a lot to choose from. That's actually down on the 5-year average by over 15%. So the amount, when we're looking at supply and demand, we're down on the supply side by over 15% from the average, not the high, just down 15% from the average. So all those cities that we've mentioned are running on empty when it comes to properties for sale. So all it means is there's more scarcity of listings to choose from, and scarcity drives growth. So Perth total listings are down 30% versus a year ago. So there is 1/3 less properties to choose from for the buyers in the Perth market. Darwin is down 33.5%. Regional WA is down 34.5%. Regional Tasmania is down 26%. So you can't buy what isn't for sale. And if there's less of it, the existing amount of demand needs to compete more for what is available for sale. So when supply is constrained, sellers hold the power. Even with buyers pulling back a little bit, there just isn't enough stock to push prices down. So it's really an issue on the supply side. New listings are also below average by about 6% on the 5-year, and that's Australia-wide. So vendors aren't rushing to sell. They're seeing what other people are getting, but vendors don't want to become buyers in the current market. They're too worried about, if I sell now and the market keeps moving without me, I won't get back into the market. So they're just choosing to sit tight and hold. So the average hold period of many suburbs Australia-wide is growing, and there's just less stock, with demand side increasing as our population grows, as the government increases the threshold on the first home guarantee schemes. demand's increasing, we're not building enough new dwellings, vendors aren't selling, and it's purely just we need to create more stock in Australia to slow the growth. And until that happens, even with interest rates where they are, would expect to see solid growth Australia-wide. Auction clearance rates is also an alarm bell that we can pay attention to. This is particularly relevant in the Melbourne and Sydney markets. And this is the number one indicator that tells you where buyer confidence currently is, specifically for those two key capitals. And auction clearance rates are currently sitting at 52.7%, which is the lowest since July 22. So confidence is decreasing July 22, which means only 52 out of 100 properties are selling under the hammer. So 6 months ago, this was sitting at 72%. So the current or the more recent interest rate increases at the Reserve Bank to the cash rate has pulled out about 20% clearance rate from auctions in Sydney and Melbourne. Confidence has decreased in those markets. So if you're buying in those markets or looking at a property at auction, especially in Sydney and Melbourne, your negotiating power has increased significantly to 6 months ago because more deals are getting done post-auction now when they're not selling under the hammer. You've got the opportunity to buy in post-auction and negotiate maybe that little bit harder. But if you're a buyer in Sydney or Melbourne right now and you've been losing at auction, it's just a change in strategy or changing your buy strategy. But remember, what's relevant in one market is not relevant in another. So just understanding the data for the region that you're buying in is quite important. So what does this mean for you? I guess the clear takeaways, if you're looking to buy in Perth, Brisbane or Adelaide, the market's still moving and it's still moving quite fast. It's just not at its highest pace. The stock is very tight in these areas. So a lot of the deals can be getting done off market as well, where they're not hitting the major portals like realestate.com and Domain. So you need to be looking across all channels, finding that property that you want to buy. We personally, as a business, do around 65% off market. So there's just more opportunity to buy off market than there ever has been before. If you're looking in the Sydney or Melbourne markets, you have a little bit more negotiating power. Again, this depends on the region within those capitals, especially if you're looking at properties at auction. They're not selling not as many are selling under the hammer as they were 6 months ago. So your post-auction strategy matters. Don't confuse a slowing market with a crashing market. We're certainly not in any form of crash, just due to the complete and utter scarcity and low levels of supply. But you must understand where and what you're buying, the suburb and the individual data points behind each suburb. There's still many bad eggs out there. There's still many suburbs that will be contrary to this data. And finally, I guess if you're thinking regionals, regionals did outperform the capitals over the rolling 12-month period. Regionals did 11.7%, where the capitals combined did 9.3%. So the regions are quietly outperforming those capitals and are often overlooked, especially by investors that are chasing a good blend of that capital growth and yield. So this is not the market you can afford to be passive. This is a market where the conditions across different cities are wildly different and vary. What works in Perth doesn't necessarily work in Melbourne or Sydney. Define your clear strategy of what you're looking to do. Find the market that suits that strategy and execute accordingly. If you want help looking to buy, reach out to us at discoverbuyersagency.com.au. Fill out the web form or reach out via email, Kane at discoverbuyersagency.com.au. Thanks for listening. Short and sharp. Hopefully there was some value in that. See you next week.